set. All engines go. Welcome to the angle. Let's start the show. Hold on tight. The stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Welcome everyone and good morning. Welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have a thunderous lineup of segments for you all to give you as much information as quickly as possible. As per usual, we'll go through some live trading potentially and some market analysis from now till around 10 o'clock. Then 10 o'clock, I'm sure a lot of you saw the thumbnail and may be interested in this. We're going to do a full NVDA, not NVIDIA, NVIDIA ER preview. Obviously, they're reporting after hours today. We'll talk about that in a little bit. I've gotten that broken down into 10 critical areas for you to watch for their earnings today. So you're going to want to stick around for that. That way, if you are listening to their earnings call, you're an investor, or you just care about how it could affect the market, you know exactly what to look for during that earning call, broken down into bullet points for you guys. Keep it real simple for you to stay focused and pretty streamlined on that. And then lastly, we're going to go into what I like to call the week ahead. So it's going to kind of piggyback off that NVIDIA segment where depending on how NVIDIA performs, it'll kind of give us an idea of what to look for the week ahead going to the end of this week, because obviously with NVIDIA being such a massive part of the S&P, it's going to affect the markets greatly. So we want to have an idea and a conversation off the back of that ER on the bull side and the bear side of things, getting an idea of what to look for heading into the end of the week and potentially further out. So I hope you all are having a fantastic morning. We're already off to an interesting start. NVIDIA starting the day up around that 136 area. Market has been interesting actually this morning. If you look out, let's zoom out to about the 5 minute here. We in the pre-market, I give you guys these levels if you're in the exclusive trading community that I'm a part of. I give you them here. I had this line on here forever now. It's one of our LOIs, levels of interest. 589.53, few cents off there, but tapped that in the pre-market. Was looking like we were going to go down there, tapped it, and now rebounding up here into the pre-market near the open. This is the 5 minute chart pre-market on SPY. Currently sitting around that POC. You see the volume shelf here that we talk about on our programs. Sitting here on this POC into open. Both of these LOIs are going to be in play today, so be very mindful of that. That 592.65 to the upside. Not a lot of upside from here. And it doesn't mean necessarily can't break, but it just means in terms of like where you want to be risk on, risk off. Be conscientious of that. And obviously getting that double bottom, coming back and back testing this level wouldn't surprise me either today. So obviously sitting somewhat level of rangy today before a big market catalyst with NVIDIA's earnings today would make a lot of sense. Now, we have seen NVIDIA move prior to earnings. As with other big Mag 7 companies, it's not shocking to see a move before earnings, but NVIDIA is actually sitting on a really interesting part of the chart right now. I'll touch on it very briefly right now because we are going to have a whole segment dedicated to speaking about it later, but just looking at the chart right now, you're right above this LOI at this 134.22 area. You've basically consolidated here too, gapping up somewhat today. Or not gapping up, yesterday I should say. But you're basically sitting pretty tight around this area. There's a few levels on here I want to talk about and where we could potentially go. But I'm actually not expecting too crazy of a move on earnings. We'll talk about that later. But I'm going to give you areas of interest for you to watch, whether you're bullish or bearish, and how to at least manage your capital, at least protect your capital, because earnings is going to have a snowball effect, obviously, on basically everything, growth, tech related, etc. So we'll talk about that later. Looking at the Qs right now, up a little bit in pre-market. So are the Russell basically flat. So you want to keep an eye on IWM like we talk about in this program. I like to use the Russell as kind of like a sentiment driver. We're actually also in a very interesting spot here where small caps have been looking pretty strong lately. And if we got this red star here, we're above this POC on the daily. We got a lot of resistance here, but getting above this area here, let's turn off our lines here momentarily. Getting above this area here, you got that 200 MA, which is going to act like a roadblock, but you could lead to a decent rebound here. You kind of have, for those of you that like shapes, you kind of have this inverse head and shouldery kind of look setting up here. And you're above that POC as well on the daily, so you could have a decent potential for a rally in, like I like to say, sentiment, small caps, growth. But that is obviously going to hinge on how NVIDIA is doing today. Now, look at the VIX. We're under 20, which is great to see. Been a wild ride the last few days for volatility, but we're coming down a little bit now, so you want to keep an eye on that. Ideally, heading into this ER, especially if you're bull, you want to see the VIX stay sub 20. I'd be pretty happy if we see the VIX stay sub 20, especially if you're more bullish on the market in general. That's going to make me feel a little bit more comfortable to be a bull, at least near term. Full transparency, I did sell a good amount. I went to like 50% cash yesterday. I still have some growth exposure, still have a lot of safe haven exposure, but I did move a good amount to cash just because of where we're sitting on the SPY. And again, I'm not being a bear, I'm not being a bull, I'm just saying there's a bull and a bear case here where we could get a rally and a push much higher, and we could reject lower. And I'm not trying to fool you guys by saying we could go up or down, but it really is what it is right now. And that's why I like to highlight on this program is the upside and the downside and how you can be risk averse and you can make the correct decisions for yourself on where you should take the risk and when you should take the risk, when to hit the gas, when to hit the brakes. For me, it's just kind of like easing up right now. I still have exposure in the market. I'm still in the market, but I'm just letting this pass and seeing where we go from here. We talked about Apple. We've been talking about Apple quite a bit. Still moving bearishly. I am not going to be a bull on Apple, like I said on this program, till we're like pretty clean over this like 210 area. I do think there's a higher probability that we come down, whereas on the weekly, down to that 200 on the weekly. It's 178, 180 area before I get too excited on Apple, where I would consider being a bull. Now, with that being said, the bulls are defending this 195 area pretty strongly. You have these two weekly candles here. You have two wicks down here right around this 193-ish area and rebounded higher. So you're going to want to watch that area to hold into the end of the week. Obviously, with NVIDIA affecting that, you could see a break or a defense here and a nice rebound. So you could see bull step in early. But again, if you're being more risk averse, you may want to wait for a little bit of a deeper retracement. Totally up to you. You can also scale in, scale out, whatever. Many ways to cut a pie or whatever the saying is. Looking at Microsoft, it's actually looking like a decent short. They're strong. Yesterday, pretty solid day too. But if you're someone who's looking at just like who has the advantage here, your all-time high is at 164.79. They reported a pretty solid earnings. I don't think they're as strong as people think they are. With that being said, if you're looking to take a short position on a Mag 7 name, risking your all-time highs here, not a bad idea. Just saying. You could have a double top kind of shape. You've pretty overextended here in the short term. However, yesterday you had really good volume and a decent push closing higher than that localized high. So there is a potential here for a continuation to the upside. I just wouldn't be chasing a bull side trade here, but something to just be mindful of. And I like highlighting the Mag 7 with you guys specifically because it kind of gives you an idea of how the market could move in totality. Because obviously the Mag 7 is whatever is 20-30% of the S&P. So massive names that you need to be aware of if you're especially just trading the market in general. Still love Google. Solid name here. Back tested the 200 MA, moving back to the upside. Very tumultuous days, the last 2 days or so. Very interesting moves there. Amazon looking like we're coming back here. Again, very similar shape to the SPY. Kind of like again, that weird kind of inverse head and shouldery kind of look. Consolidation here. Breakdown lower, swept the lows, come back, and another consolidation here. So definitely a case to be had there. As long as Amazon's over that key level, like I said on this program, that 211 is a very key level to watch. And lastly, Tesla. Great day yesterday for Tesla. Solid push here above the 50% retracement. And above that top line LOI, that 345.72. Got some air here. Can push much higher to that 386.70. So that's obviously going to be more of a bull catalyst for the overall market. Looking at the daily, looks pretty good. The weekly looks ready for a push. If you're a bull on Tesla, I think you're pretty okay, barring any crazy things said by any certain individuals. Outside of that, market has now moved down a little bit. We're about flat into the open here. Got about 3 minutes into the open. Let's do a little bit of a catalyst rundown just to make sure we've got what we got going on today. Like I said, I don't think we had many catalysts. You do have FOMC minutes at 2. Can be effective. Like, I don't think a lot of people worry about the minutes because obviously in the minutes you're going to look for any details that were missed during like what Powell said. Obviously can affect the market for sure. It's just not something I personally am too worried about in general. This was just added to the docket that Trump will sign executive orders at the exact same time at 2 o'clock today. So that was not on there earlier this morning. So keep an eye on that. Also not on there earlier this morning at noon. Vance to speak at noon at a Bitcoin event. So if you're someone who has exposure to crypto, Bitcoin, any Bitcoin miners, be very conscientious of that. If I'm a betting man, he's going to say something to try to pump crypto. Just saying, do with that information what you will. You got the 5-year note at 1. May see an effect there. But other than that, NVIDIA is the one thing to look out for. That's about it for today. Looking forward to tomorrow. You do have jobless claims tomorrow. And you do have quarter-over-quarter GDP at 8:30. So that's all pre-market. Barkin' at 8:30 in the morning. So you got a few things pre-market tomorrow. And then you got a few other Fed speakers sprinkled throughout the day before close. So nothing too crazy today or tomorrow. But again, especially keep an eye at noon if you have exposure to crypto. Obviously, if any sort of presidential anything mentioned about crypto, it has an effect on the market. So you're going to want to be aware of that. We are 42 seconds into the open. This just came through the wire. Hamas, we agree on an outline for Gaza ceasefire. We are waiting for a final answer on Gaza ceasefire deal. Interesting. That could be good. Other than that, nothing too much here. You had a little bit of a spike in oil futures, but other than that, pretty tame open. We're pretty flat on the open here, so we'll see what things look like here momentarily. 11 seconds into the open. Like I said, we'll do some live market commentary, and then around 10 o'clock, it might be even like 9:45, because today might be a slower day. We'll dive into NVIDIA. Like I said before, I've got it broken down to 10 key bullet points for you guys, things to look out for. So when you actually listen to the earnings call, you'll actually know what all these numbers and all these things mean to make it much more simple for you to understand. So keep an eye on that. Coming around 9:45, 10 o'clock, we'll touch on that. Market's open right now, moving up here a little bit into the open. Q's getting a push here. All right, all three indexes pushing to the upside. VIX 19, so keep an eye on that. Like I said, ideally, if you want to be a bull today, you want to keep the VIX sub 20. Sub 19 even better if you want to be a bull. And keep an eye on your VVIX. VVIX, big move down. minus 12%. So remember, that's the volatility of volatility. So how volatile is volatility? What are the odds that volatility is going to swing? Seeing that VVIX come down and seeing VIX pretty flat is a pretty good sign, at least in my opinion, if you're a bull, because it could be indicative of volatility decay, which would mean that volatility would come down, which would be a good thing if you're a bull, theoretically. Volatility doesn't have a one-to-one relationship with the market, but it's like a 80% of the time it's related to the market. So lower volatility tends to lead to a bullish reaction on the market. I wouldn't necessarily rush this open today. NVIDIA getting a little bit of a dump here at the open. I wouldn't necessarily rush this open today, especially where we're sitting on the daily chart. You've got, like I said, even before the open, we back tested this key LOI here at 589.53, right in that pre-market, bounced and came up. So both of these lines are going to be in play today. So there's a probability that we go either way here, just because of where we're sitting on the daily chart and where we're sitting at the open. So I would, if I am going to take a long, I call this fishing. So I like to set a plan, wait, and then if that happens, I take the trade, and if it doesn't, I don't. So if we do tap this lower LOI, I'll consider, depending on how other technicals look, a long play. And if we tap this upper LOI, I'd be less likely to take a short on the market, just because of where of this catalyst of NVIDIA reporting today. And I'm very particular when I take a short, so I'd be more likely to wait for this lower test here that sweep down to 589.53 before exposing myself to a long position on the day, especially with a 0 day. There's a chance you could get chopped up today. So if you are an options trader, just be conscientious of that. Your Russell is teetering here, potentially going red, so that could be a sentiment driver, or a hint at sentiment throughout the day. Key LOI on the Russell, or on IWM I should say, 207.76. Guys, I have about 77 viewers right now, a little lower than normal, but if you could do me a quick favor, if you enjoy the content, if you like more of these streams, I ask you twice a stream. This is going to be the first time. Do me a quick favor, like the stream, retweet it, subscribe if you're on YouTube, drop a comment, etc. Helps me very much. I very much appreciate it. I know it's going to take you just a few seconds, but I'm a very small fish, and it's very much appreciated. I see all of you that do, all of you that support. I'm very conscientious of it, and I appreciate it very much. So if you could take a second to do that, thank you in advance. Moving up here a little bit into the open. Like I said, I'd be a little careful here. Out of curiosity, since I got the chat up here, how many of you are doing... Actually, let's do a little poll. How many of you are... Let's drop a 1 in the chat if you are either interested or have exposure into NVIDIA earnings today. And drop a 2 if you don't care. Just out of curiosity. 1 in the chat if you have interest or exposure in NVIDIA, or 2 if you could care less. Doesn't bother you, you're not exposed, you don't care, it's just another thing. Just want to do a quick temperature check. Let's see. Where are we all sitting? Do people care? Do people not care? I'm going to guess people care, but I could be wrong. Do we care about earnings? Do we care about NVIDIA? We will see. So I'll give you guys a moment to type in there. So far, we have 1 person who cares. 2, no exposure. Okay. 50-50 so far. Do we care, guys? If I have 2 people, that's an even split of a 50-50. You know, guys, I'm gonna remember all of your names that you're watching here early on, and as this grows and as it gets bigger and whatever, I will remember you and I will do something cool. I don't know what, but I'll do something cool for you. That's a promise. You could clip this and remind me as the show grows when it gets to a certain point and be like, remember I was one of those guys. All right, so we have 2 people interested, 1 having no exposure and not interested. Okay. It's a good enough sample. Hold on, let's do the math here. So out of 77, okay, that's a sample size of 4%. I'll take it. So with a sample size of 4%, we have a 66%. Cool, another one. Great. Thank you, David. For 5% sample size. Okay, I'll take that. So most people have exposure, some sort of interest. I have lots of shares with NVIDIA and NVDL. will get rid of NVDL. Real quick, so I see a lot of people, especially on social media, talk about these exposed or these leverage ETFs. Quick lesson on leverage ETFs. You want to read prospectuses. Some of you may not even know what a prospectus is. So a prospectus tells you like the risk of said trade or what it has exposure to. And I'm not poo-pooing on anyone. This could be a great fund. I don't know anything. But it looks like it's a 2x long NVIDIA ETF. What you want to look at here, and again, this is without me reading the prospectus, but you need to read the word daily. Looking for the expense or the exposure of 2 times the daily percentage. There is a world where, because this looks for daily percentage exposure, that NVIDIA could go up while this fund loses value, goes down over time, over longer periods of time, because it looks for daily exposure. So just be conscientious of that. I see a lot of people pump, you can pick my word carefully there, maybe not pump. I see a lot of people promote, better word, promote funds like this. And again, no shade on this fund. It may be a great fund, but you at least have to understand the risk. For example, I know another one, and I've personally invested in AMZZ. That's your Amazon, I think it's a 2x leverage. Same story. Yes, so this is a 2x leverage. Same story there, where Amazon could go up in value, but because this seeks daily exposure, you could lose value on this if you own AMZZ. So what you need to be conscientious of anytime you're in a leverage ETF, you may think, oh, well, I'm not going to buy options because that's too much leverage. I'll buy an ETF. You could actually expose yourself worse, depending on how you structure the options trade, with a leverage ETF because of how they're structured. So just be aware of that. And again, there's nothing wrong with these, but you have to at least be aware of the risk behind a daily exposed ETF and how they get their value. If you just look at the name and go, oh, this is NVIDIA 2x long, cool, it's just going to expose me to double the move in NVIDIA. It's not entirely true. It's daily exposure. That is very important. Please, if you learned one thing today, allow it to be that. Allow it to understand how these funds work. So, again, no shade on NVDL or whatever, but at least know that risk. If you know that risk, great, this message isn't for you. But it's for anyone else who may consider these, might see these things and want to expose themselves to these things, which is fine, but at least understand the risk in having that exposure in these kinds of funds. So quick little PSA there. If you don't know, now you know. Alrighty. We got another 2 from Brandon. So we got 1, 1, 1. So that's 3 to 2 split. Anyone else floating around out there want to share? 1 in the chat if you're interested in NVIDIA earnings, 2 if you're not. It's almost an even split. It's pretty close. Pretty damn close. SPY pushing up here into the into the open, not the pre-market. Got about another 50 cents here. Like I said, this is where I would look to take a short. I just probably won't. Volatility's moving down. Ooh, your VVIX moved back up. All right, I must have had a data lag here because it's a negative 12. And now it's at +1. So it must have been yesterday's data. So VVIX is actually pretty flat on the day. So scratch that from the record book. That must have been a lag on the data end. Let's take a look around. Apple popping up, coming back down. Microsoft, like I said, if we tap those highs, it could be a decent short. 464.79. That's your all-time high. Now you could break that and push very hard, obviously, but taking a short there, I don't hate it. I definitely don't hate it. We'll keep a line there just to keep an eye on it today. Managed risk. Something like that. So what I would like to consider here if I did take a short on Microsoft would be to look at specifically a call credit spread in this scenario. Well, actually, hold on. Before I speak. Actually, I want to do a put debit spread. So quick, I'm going to do a whole little lesson on this probably on Friday. Actually, I thought about it. But for those of you that understand spreads, a call credit spread and a put debit spread offer you similar exposure. In this scenario with Microsoft, why would I be more interested in a put debit spread versus a call credit spread? Does anyone know the answer? There's one reason. And if you're in our community, you know why, because I talk about it all the time. They offer you very similar exposure, but there's one massive difference between a call credit spread and a put debit spread. Ooh, Michelle says 2. We have an even split. 1, 2, 3, 1, 2, 3, 3, 3 on the NVDA interest. But does anyone know why, in this particular case with Microsoft specifically, where a put debit spread would be a better option than a call credit spread? You can say you don't know as well. I'll share it with you guys, but I want to see someone take a stab. I know for a fact people know the answer, especially if you're in our community, because I talk about it all the time. Ooh, SPY wicked up, tapped my LOI, and is now rejecting. Wicked above it, closed beneath it. Hard reject. What a beaut. Let's see if there's continuation here to the downside, actually. And back test that POC here. That point of control where the most volume by price was traded today. That's at 591.85. So we'll see if there's a little bit of a sweep down here. Anyone have any idea why a put debit spread would be a better option than a call credit spread on Microsoft specifically? I'm trying to feel out because I'd like to the show, like I said, I want to have segments for the show. I want to do some live trading for you guys, but I also want to steep in like education, like things like I always want to say, I want something to be in these streams that you can actually take away. I don't want to be these streams where you could watch anyone live trade, right? It's not unique, it's not interesting, but if I can actually force and challenge you guys to think about things a little differently, then you might actually go away and learn something, and when you learn something, you can actually use that to apply something to the market and then make more money, which is what, like, you're spending time watching me. Yeah, I can be entertaining, I can go like this with my hands and you're happy, but what if you could be entertained and learn at the same time? That's what I want to do. So we'll circle back to that. If anyone wants to take a stab at it, I'll give you the answer. If no one wants to take a stab at it, then I just won't. So you can sit on that then and find out on your own. VIX is moving down right now. We just broke 19, right now at 1883. So volatility is coming down. VVIX flat. So again, we got to scratch that negative 12%. It was not negative 12%. That was a glitch. And UVXY pretty flat. So volatility flat as we're farting around this 592.65 LOI. Very interesting indeed. Let's check out our sectors because we have not taken a look at our sectors just yet. Utilities down a little bit. Tech looking pretty good into the open, 0.46 positive. Real estate down. Materials down. Industrials looking okay, 0.25. Healthcare looking pretty good, 0.25. Financials flat. Energy down a little bit. Staples up. Discretionary pretty flat. Watch Tesla. And Comservice is up pretty good, 0.5. So mixed bag today. Like I like to say, so the two that you really want to pair together, and I should really like reorganize these like that. Your energy and utility. These are like your defensive, right? Utility and also your consumer staples. Here, now I've paired them all at the top. That's like your defense. So when you see a clear money flow there, so if these three are green and all the other ones are red, then that could be indicative of money rotating. So we're seeing right now utilities push to the downside a little bit, energy push to the downside a little bit, and consumer staples actually going up. So it's not really indicative of being risk on or risk off behavior, but when we see tech up, that's typically more risk on behavior. So mixed bag for sure. The other thing that I look for to delineate where risk is, so if I should be risk on or risk off, like I said, I use IWM as a sentiment driver. IWM is giving me an idea of how small caps are moving, obviously, but it also gives me an idea on how retail is trading. I see a lot of retail traders, obviously, are going to trade smaller cap companies. We see that with the IWM moving down right now. So that's giving me a sign between this and between the sectors in general that we have a pretty mixed bag, that unless I'm playing individual names, I want to be limited in my exposure on the day if I'm day trading. I want to target specific names, not necessarily trade the market. If you guys are part of our community over exclusive trading, if you want to join that, check it out. Links in whatever you're watching on right now. I trade SPY very frequently. When these things line up like this, so when volatility lines up like this, when the Russell lines up like this, when the sectors look like this, I tend to stay away from the SPY. So even if I may be right, like in this scenario, I said there's a good chance we're going to tap this LOI and there's a good chance we're going to reject. Here's a rejection. And I said there's a good chance we're going to retest that POC, which did move up here, but it was whatever, it was 591.85, right? Pretty close to it. I didn't take the short. Could have taken the short, but just because I'm right, I can still, like I like to say, sharpen the sword, sharpen the steel. I practice and I go, okay, cool, I would have been right, but the risk parameters weren't there where I want to put my money on the line. So it's not that I'm like not willing to trade, but it's a matter of, is it worth it, right? Seeing things play out in real time lets me reassure that I was right and I made the right decision. Even if I could have made money on this, it's fine. But knowing the risk and knowing how much I should have been exposed, if at all, by looking at everything and saying, could go either way, that is just as powerful. And I think a lot of people romanticize trading where, like, I made 15 trades a day and I made 5,000%. Oh, look at me, I've got a big wiener. That's not how you should be trading. You should be trading with, I made a calculated move, I was smart, I had a specific plan, I played the plan. And if everything lines up to take that trade, I will respect that trader so much more that's willing to execute on those trades versus than someone who is just, I don't want to say spastic, but someone who's more aggressive. Now, there's obviously times where you could scout more, and there's obviously times where you could be more defensive, whatever. In general, being able to call your shots and take your time calling those shots is what matters. Give me 1 minute, guys, because my dog is begging me to go outside. So give me 1 second. Let me just take care of him real quick, and we will be right back. We'll probably hop into NVIDIA momentarily. So hang on 1 second. I will be right back. All right, sorry. The dog saw a bird, so you know that above all else, have to get the bird. All right, market actually broke that POC, which did come back. It was at 591.95. So we saw that trade, what could have been a successful trade for me, play out in real time. But at least I like to talk these things through with you guys so you could see in real time how it could have gone, or if you wanted to take the trade, how it could have played out. So not every trade is worth it. It's just nice to see when you can have a plan and follow through with said plan if you decide to take the trade. So we will move into our next segment, which is going to be the NVIDIA ER preview. So what I've done for you guys here is actually, let's pull up NVIDIA and let me do this. Okay. Alrighty. So obviously NVIDIA reports earnings today after hours. So what I did for you guys is I took 10 key areas of their earnings call that you want to be mindful of. So I broke it down to bullet points, and I even separated it for like bullish and bearish things to look for. So I'm going to basically give you guys the main things to watch for, why it's important, what to look for if you're a bull, what to look for if you're a bear, or at least bearish things and bullish things. So the very first thing, and the most important, at least in my opinion, is going to be their data center revenue. So this is like NVIDIA's crown jewel. It's the most important thing to them, at least in my opinion right now, which is obviously going to be driven by AI and GPU related sales, their H100 and their A100. If you're more of a bull, you're going to look for the continued year-over-year growth. So this is going to be a very high growth-driven name, obviously, and because AI is so important, this is our canary in the coal mine, right? This is going to give us an idea of what the future is looking like, or what the future market is going to be looking like. So you're going to want to probably look for over, at least in my opinion, 50% growth in this segment. With that growth, so if we see over 50%, is more than likely going to show enterprise and hyperscaling demand is moving up. People are aggressively looking to grow their AI business, right? And that's going to show more fuel for longer term AI infrastructure spending. Now, with that being said, let me rewind a little bit and say a little preface on NVIDIA earnings. I think there's a very low probability that NVIDIA misses their earnings. I think there's a very low probability of that happening. However, I think the expectations as they've been are set very high, and that in itself can lead for a very treacherous report either which way. They could blow earnings out of the water, but if these certain things aren't what they should be in terms of like for example, data center revenue might be 30% growth year over year, might be fantastic, but because it's not 50%, because it's not good enough, you could see a little bit of a failure in NVIDIA. So just keep that in mind as I'm saying everything. Now, the bearish signal for this data center revenue report would be any slowing down or flattening. So that could suggest a pause in hyperscaling. And you want to keep an eye on like these larger companies like Meta, Amazon, and Microsoft. Now, with that being said, we've seen larger capital commitments from these tech giants. We've seen Meta, whatever it was, 60 to 70 billion of 2025 capex. Microsoft was 80 billion, and X, if you're watching on X, they're looking at 30 to 40 billion. So we see a lot of money going into the segment, but it's how much, and how much is that growth? So that's your very first bullet point to keep an eye on with NVIDIA. Now the second, and I'm ordered these primarily in importance, so that kind of helps you guys out too, is your gross margin. So especially you want to look at your data center versus your gaming. So this matters because that margin is going to tell you how profitable each one of these segments actually is. NVIDIA's gross margins have been mostly elevated due to the H100s. So if you're a bull, basically kept it like this. Use 75%, for example. So we want to see, if you're a bull, margins expanding over 75. That would more than likely suggest stronger pricing power and the product mix skewed towards the higher ended chips. Now, under that 75% might indicate pricing pressure, so people not having the money, right, necessarily, or they're discounting product, or cost is increasing from supply chain. So it costs NVIDIA more money to acquire raw materials to produce the parts, essentially. So that number, essentially 75. Use 75%, super easy. Over 75 on margins, bullish. Under, bearish, which again isn't bad, but it's just not good enough. Be mindful of that. Number 3 out of 10 is your inventory levels. So this is going to reflect your demand, your supply and demand balance, essentially. Obviously, if you have too much inventory, you could be overproducing, and it can also indicate that people aren't buying. So your bullish signal here, you want to see inventory trending lower. Now, take this with a grain of salt, because theoretically, it could also be a bearish sign that inventory is trending lower if demand is all the way up. Two reasons. One, if they can't acquire goods to meet demand, that's very bullish because so many people want their product, but at the same time, you could have 1 million orders, it doesn't matter if you can't fill them. So depending on how that information is delineated on the call, this could be seen bullish or bearish. It really depends. But overall, I would lean towards inventory trending lower year over year or quarter over quarter, would suggest strong sell-through and supply chain efficiency overall. So they're actually getting the parts they need, they're producing everything, they're meeting orders, they're good, and they're keeping inventory levels at a manageable area. If we see inventory levels rise, it could hint at demand starting to wane, which could lead to future write-downs, discounting products, etc. So again, this one's a little bit of a gray area because there is an argument either which way with how inventory actually moves. So for that matter, you're going to want to at least give some levity here with depending on how the information is. I would really say what they say on the call, because you could see inventory trending lower, but again, if demand is so high and they just can't acquire the products, that's a good thing, but it doesn't mean anything because they can't produce the products, sell the products to make more money. So that one's a hard one, but it doesn't mean it's not important. So very important regardless. If they say, hey, inventory is trending lower and our sales are up and we're managing everything really well, fantastic. That would be what you would look for specifically in the bull case. Point number 4 is going to be your guidance for Q2. Obviously, the market's forward-looking. Guidance is extremely important. Sometimes guidance is way more important than results, because it's not about what have you done for me today. It's what are you going to do for me tomorrow, right? And especially with a company that's very growth-driven in the sense of this is the bastion of the future, right? We're all looking towards AI as the next big thing. this is a very important part of their earnings because it's going to give you an idea of how strong they are, how strong they could be into the future. So specifically for your bullish signal, you're going to want to look for an above consensus guidance. So right now consensus is like 26, 27 billion for Q2. So you want anything above that, it's more than likely going to be a bullish reaction. That's going to show that management has confidence essentially in demand in general, but in AI as well. So in obviously this big next bastion of growth for the company, seeing that guidance go up above that like 26, 27 area, more than likely is going to show a lot of confidence in their business and that they will achieve continued, and that's the key word there, continued growth for them. Now, bearishly, something to watch out for is they give you conservative or flatter guidance. So I guess in this case, you can use 26 billion. Above 26 billion, bullish. Below 26 billion, bearish. Bearish. Again, growth is still growth, but again, it's not, is it good enough? So if we see below 26 billion, it could show one of two things. Could show that growth is starting to plateau, so there's not much more demand. Not that it's bad, but growth is just flattening out. Or there could be near-term headwinds. Again, supply chain issues, especially with like tariffs and trade wars and whatnot, that could be some level of an impact here. Point number 5 is going to be their capital expenditures and their R&D spend. So CapEx signal will typically give you confidence in long-term growth in companies, but especially for NVIDIA, you want to be mindful of their CapEx because it could show you their ability to build out supply and demand and their ability to sink more money essentially into R&D and innovation as a whole. If you're not growing, you're dying, right? If you don't have the ability to sink more money into the next thing that you're going to do, the next big ship, the next whatever, then your competition can catch up and you lose your footing. So seeing CapEx strength will be very good. Now for this particular thing, I'm looking as the bull side of things for the R&D and CapEx to ramp up, especially if R&D starts to go towards like 1.5 to 2 billion. Would actually not be a bad thing, at least in my opinion, because it could show that they're starting to invest more money into the next gen Blackwell chips or other new verticals, other areas where they can make more money. So seeing that ramp a little bit may not be a bad thing at all. Now, the thing you want to be conscientious of, because this could signal them being more defensive or more conservative would be the word, flat or declining spend. So if you see flat or declining spend, they're less excited about the future. And again, this is all theoretically. Or they're being more conservative on future bets on tech, at least at this point in time. So seeing that come down or flatten out could be a risk factor. So be very mindful of that. Point number 6, supply constraints or commentary on the founding partners, TSMC. NVIDIA depends heavily on TSMC's capacity for cutting-edge node production. So specifically with this relationship, you want to see that there's a clear runway essentially for TSMC capacity, that NVIDIA can fill these large orders without any delays. It means nothing if NVIDIA can't have, again, all their supplies, everything to do their job. Now, if there's the bear side of this, and this would be more like on the call, so if things are said on the call, supply bottlenecks could limit that short-term upside. So even if, and this we already discussed this, but even if demand is really good, if there's an issue with getting supplies, it doesn't matter. You could have all these orders, but if you're unable to fill the orders because of X, Y, or Z, you can't get the certain part from over here, you can't get the certain, we for some reason can't get these nodes, or we can't get these, we can't get enough cobalt, whatever raw material, other material from another company, whatever it may be, that could be a hindrance on this earnings report. So you want to be very mindful of that. Now, specifically moving to point 7, we want to look at the gaming segment and if it's going to recover or not. So you've seen with the gaming segment, it's kind of declining. Not that it's bad, but because AI is so big, it's just not as big of a focus, I guess I should say. So while AI is very attractive and hot right now, gaming is NVIDIA's, it's their baby. It's like their cash cow. It's always been there, so to speak. And that's where a lot of their brand loyalty comes from. My computer is running on an NVIDIA card, right? Like This is like that's their old fashioned bread and butter. It's the thing that's sticking around, and that's what's really good. That's their cash cow would be the best way to say it. That's the most important thing from a simplicity standpoint, I guess I should say. So on the bullish side of things, you want to look for gaming growth year over year, specifically with the RTX 40 cards. Keep an eye on that. That would show that the consumer is being resilient and people are looking to upgrade. So people want the newest card. I will say, as someone who games and as someone who uses a computer, obviously, there isn't, at least in my opinion, a need for a lot of these higher end cards. We're getting to the point where the cards produced by NVIDIA are phenomenal. However, the software being produced to run on said cards doesn't need that much firepower. We're not at the point where we're seeing like, and you could probably argue this if you disagree till you're blue in the face with me, but with a lot of the games that are out there, unless we're playing GTA 6, which isn't out yet, you probably don't have that like super hyper realism that needs this demand of like these newer cards, because there's nothing that can utilize that information, can utilize that the power yet. I mean, think of it this way: for those of you that have seen like the GTA 6 trailers, it's beautiful. Like there's so much detail and so much that's gone into it, and that's going to run on a PS5, which has cards in it from 5 years ago, and it's going to run that. So when you're thinking, and I'm trying to give you guys something to think about here, when you're looking at this gaming sector specifically, the only reason, in my opinion, that you'd buy one of these higher end RTX cards, or the newer ones, for example, in general, would be to run a higher end game. But would I need that if my theory, my PS5 can run GTA 6, which is going to be the greatest looking game ever at this point? So do I need all this extra firepower? And I think the consumer's smart enough. I think the only reason you get these higher end cards is if you're doing crypto mining, or you're doing something else where you run a heavy GPU load or CPU GPU load on your computer as a whole, where you need that. You're running 1,000 programs, you have multiple monitors, and I don't think that is the large amount of their consumer base. I think a large amount of their consumer base, like I just said, is their gaming segment. It's for games, obviously. And I don't think the demand is there. And this is my personal opinion on this. So that's the bullish thing you want to look for, is that there is demand. There's growing year-over-year growth, especially with the RTX 40 series cards, because that will show that the consumer base is resilient. I'm just giving you my 2 cents in there as well. But the bearish sign is the continued decline. Or we're seeing competition steal some of that, like AMD, or, which this is what I just went off of here, lack of compelling titles. There's not games that would justify the need of these higher end cards, at least in my opinion. So for this specific point, I think we'll be bearish no matter what. I don't think everything else could be like, we'll wait and see. I think gaming's going to remain bearish because it's just not necessary. There's nothing, and someone can correct me in the chat if I'm wrong, but there's nothing that's out there right now that needs this power that is a game specifically. And if we're looking at gaming, that is their bigger customer base. Obviously, like, you could have multiple screens and other things that you would need a stronger card, but if you're just a gamer, you don't need these higher end cards yet. Point 8 is automotive and the edge with AI growth. So NVIDIA, this is where you could see a lot of random, I want to say random growth, but you could see a lot of, I guess you call it like the moonshot, right? There could be some hidden upside here from AVs, robotics, and edge computing. Obviously, they have some level of exposure here. So for this, you're going to want to look for 50% year-over-year growth in this general area, or any new partnerships with any companies. Obviously, obviously, I say obviously, like, there's always news about NVIDIA investing in these smaller companies to work on relationships with how to build new chips or whatnot. So keep an eye on seeing if there are any new partnerships that are announced that could show them moving in an area where they could expose themselves to new revenue in a segment where they're not necessarily exposed to, again, like automotive or anything like that. And in this case, in the event that this area flatlines, there's not much news here, or there's not much growth here, the scary part of that for you guys looking at their earnings is it could be that it could signal that NVIDIA is like a one-trick pony. They are just the AI data center company. And I don't think that'll be the case. I think, if I'm giving my opinion again, this would be more the bull side, where they're smart enough where they're looking to grow and they're looking to expand outward in general. But it's to be seen. 9, so 2 more points here, is going to be buybacks and shareholder return. NVIDIA is sitting on a huge pile of cash. They've still been sitting on cash. They've got roughly, I think, 20 billion. They could buy back stock. With that being said, it's near its highest evaluation. It has come down, obviously, from the high, but you could see a buyback. Obviously, that would be bullish for the stock in general. And an aggressive buyback would signal that they have confidence, obviously, in their stock, and that they believe that it's undervalued and growth is still intact. So it's going to increase in value, so to speak. But if they continue to hoard cash, just in general, so we're not seeing R&D go up, and we talked about this earlier, we're not seeing additional partnerships where they could do something with this money. If they're just hoarding the cash, that could be another conservative take where they're looking to be a little bit more defensive. So it's not necessarily like it's a bearish thing, but that could signal bearishly, because if they're hoarding their cash or they're not looking to do buybacks, the market may start to question how efficient they are, and if they are moving to a defensive posture as opposed to an offensive posture, which, as the bastion of growth, the big thing right now, they need to be offensive, because that is what they're priced at. Their evaluation right now is because the market sees them as offensive, and they need to hold that segment. They need to hold that I want to say namesake, that offensive structure, if the market is to hold this evaluation, meaning holding its current price. Lastly, you're going to want to pay attention to any commentary on the competitive landscape as a whole. So obviously, NVIDIA is not the only chip maker. You got AMD, Intel, and other companies like Qualcomm, whatever. And also, other companies like Amazon, Google, and Meta are now designing custom AI chips. This could eat into their market share in general. Now, the CEO has downplayed the threat and basically said that because of NVIDIA's position, they're basically a full stack moat with their hardware, their CUDA, plus their software. So it is a big, for those of you who don't know what a moat is the ability to enter the same market. So if someone wants to compete with NVIDIA, there's a lot for them to do to get to that point where they're actually competition. So that's what, when there's a high moat, that's what you'd have to go through. If there's a low moat, it's very easy. So the CEO is arguing that there's a high moat. So consequently, yes, there could be competition, but they'd have to jump through a lot of hurdles to get to where NVIDIA is right now. Now, bearishly, so that's their bullish thing, is that the CEO has confidence right now. In general, this is just something to be aware of if they say anything that could hint bearishly on commentary on the landscape in general. So any acknowledgement on the call of market share loss or risk from custom AI chips could change long-term growth expectations. So this wouldn't necessarily be something to be concerned of like on the front end, like right here, right now. It could scare a few people, but looking at your long-term projections, if there is acknowledgement of that, or if anything like that is said near term, that's enough that could spook the market, even near term, where some people are like, oh, I don't like this. And if I think as an investor that NVIDIA could be overvaluated here, and also there are additional threats to the market, then I may want to get out. So that was your 10 things to look out for on NVIDIA's earning calls today. So hopefully you guys enjoyed this, and yeah, see you next time. I recorded that, so I'm not going anywhere. I had a few people who asked if I could record it, so that will be up on my channel. If you want to recap it later, I will upload that as soon as we're done with the show today. So if you missed anything, you want to listen back, or you want to fast forward, whatever, scrub it before the earnings call, you can. Or you can just listen to the earnings call, go back and watch what I said, and then tell me how right or wrong I am, which is always fun. But hopefully, did you guys like that, just in general? One in the chat if you like that, two if you didn't. I'm just curious, would you guys like that kind of thing? Especially with like a bigger company like NVIDIA. Would you guys like more of that, I guess you'd kind of say like a fundamental analysis? We're not looking at the technicals. I didn't look at the chart at all. Now for you guys on stream right now, we'll talk about the chart. But I wanted to go through those things specifically for the earnings call. So if you guys like that, if you find value in that, I would appreciate the feedback to let me know, because that would let me know that I could do more segments like that in the future. But if you didn't like that, then we won't. I like to make sure that we mix it up and always try new things here, right? Got to keep it interesting. Let's see what we missed real quick. Orca liked it. Thank you, Orca. Hatchet liked it. Thank you, Hatchet. Anyone else? Opinion? Like, dislike? 1 if you like, 2 if you didn't. SPY right now at the lows. Like I said, there's a good probability you're going to sweep that lower LOI. 2 areas that we're watching today. It's just not something I want to play today either which way. You're probably going to get chopped up on a 0 DTE. Sonam, sorry if I said your name wrong. Liked it. That's good. Glad that was helpful. Yeah, your IV is elevated. So look at your IV right now on SPY. So whenever I look at IV on SPY, I like to look at the 0 days and look at the money. So right now we're kind of between strikes. Typically, SPY IV, especially if you're day trading 0 days, you want it, and I'm saying buy the open, so you're looking to buy 0-day contracts. You want it around 15%. Lately it's been more elevated, but once you peak up over 25%, now it can keep going up obviously, but you got to take into account that IV risk. So there is a higher exposure to IV on 0-day options today, so be very mindful of that. Obviously the market is expecting volatility. And that IV could stay elevated or actually increase in elevation because remember, these contracts do trade after hours. So there is that possibility that NVIDIA could move like right towards the end of the day or right in the beginning of after hours where these might hold that elevated IV just due to the fact that they have that extra exposure, right? So be aware of that. Guys, this will be the second plug I'll do. I do 2 every stream. This is the second one. If you're watching now and you enjoy it, wherever you're watching it, do me a quick favor, please and thank you. Like the stream, subscribe if you haven't, if you're on YouTube, follow me on X, drop a comment, drop a like, retweet, whatever you can do. Hit all the buttons. I appreciate it very much. I'm just a real little fish here, and any little thing you could do, I greatly appreciate your support for the stream. So if you like the content, you want me to keep doing it, a little bit goes a long way. I know I personally, when I watch YouTube videos or anything like that, I hate when they ask me, so I try not to do it, but unfortunately I have to because I would just, there's no growth if I don't ask, and I know it's a simple thing, so I appreciate you guys taking the time to just click the button, whatever. I know it's silly, but it does help a lot, so thank you very much. All right, looking at the market, like I said, we're more than likely going to sweep this lower level, so let's keep an eye on that. Now, we're going to go back to NVIDIA momentarily. I just want to catch up and see if we missed anything, but we're going to go back to NVIDIA. I'm going to give you... Sometimes I talk too fast for my own good. I'm going to give you guys specific levels to keep on watch with NVIDIA through the end of the day. And more longer-term targets. So that way you feel comfortable if you are someone who's exposed, or at least you know what to look for in general, because obviously this earnings will at least affect the market either which way. So having these levels in mind can at least give you some solace to know where there could be support, where there could be resistance, and how the market could react with that information. So we'll get there in just a moment. That will be our week ahead segment. So we'll look at NVIDIA, and then we'll look at SPY specifically to get you guys set up for the rest of the week. And if you don't know, on Friday we're going to be doing another stream, kind of like a post-mortem. So I wanted to do it tomorrow, but I also wanted to wait and get another day of data. So I made it for Friday specifically. We're going to post-mortem NVIDIA earnings. We'll look at what happened and where we are sitting specifically from a technical standpoint on NVIDIA, on SPY, on the Qs, on IWM, and kind of get an idea of basically what's next. So if you're interested in that, make sure you check that out. That's going to be this Friday at 9:15. Again, giving that extra day to kind of let the market see how it feels after earnings. All right, so let's zoom around the charts real quick, do a quick roundup. We'll do the week ahead, and I will let you all get on your way. Looking at the Qs right now, similar move to SPY. Oof, IWM. Hard rejection of the LOI coming straight down. You're finding a little bit of support down here with some volume. More than likely going to come down. So this is what I like to see when we see these levels aligned where, you know, marginally there's a little way to fall here on 2 indexes at the same time. Not to mention we're all moving very similarly. So there's a good chance that you're going to see IWM tap this 205.92, and you're going to see SPY tap this 589.53 if bulls don't step in like very, very soon here. VIX is staying around that 19. You're going to want to watch that. Like I said, under 20 before ER is going to be best. Under 19 is even better if you're a bull. But you're going to want to keep an eye on that. Honestly, pushing to 20 would be a solid volatility push. It shouldn't push that hard, but we were at 20 yesterday, like cleanly, so could rebound. Your VVIX is pretty flat still though, so I do think that volatility will remain mostly unchanged. It's probably not going to go too far of anywhere. And anytime VVIX is under 100, that means you're in a more stable market, which I like to see, regardless if you're a bull or a bear. Keeping that VVIX low is preferred. Let's take a peek at Apple here. Similar move to the market. Nothing crazy there. Microsoft basically double topped on the day, sold off. Google, I mean, we're seeing the same story essentially. Amazon. Tesla's looking pretty strong actually. 200 MA right here with your after or extended hours on, back to open price. Bear's going to try to shoot it down here, but if it pushes, it could get a nice little rally. Like I said, between all the Mag 7, Google and Tesla are honestly looking the best here for a sustained move to the upside. Do with that information what you will. All right, so let's look at NVIDIA, and let's look at it from a technical perspective. So looking specifically at the chart, as I said there, let's zoom in a little bit. Let's go, actually, let's do that. So as I said earlier, if you caught the beginning of the stream, we're sitting around this 134.22 area pretty comfortably. You've been bouncing around it, but we're kind of sitting in this little spot here. You'll notice on my chart, I mean, it's a little crowded, but you'll see these orange lines or peach colored dotted lines, and you'll see the yellow lines. The yellow line is a big fib retracement on the monthly, so it's very important levels. And the orange ones are from the all-time high to that recent low from like the, what's that, tariff time, right? Yeah, from the tariffs, from that all-time high. So you have these two areas I want you to keep an eye on from a fib level, and then obviously the levels of interest that I have. Now, if you want to take a stab on earnings, let me phrase it like that, you're more than likely pretty safe in equity as long as you're staying above basically this cluster here. So let's zoom in a little bit. Hey, should I record this? All right, I'll record it. All right, so this is what you should look out for if you are trading NVIDIA earnings from a technical standpoint. So if you wanted to take the risk, you're more than likely pretty safe as long as you're remaining above basically this 126.25 area. That's the 0.236 retracement from on the monthly fib retracement. And you got a little bit of support up here as well at 127.72 from the 0.382 retracement from that all-time high to that recent low from tariffs. So you do have a block of support down here. You also have the 200 MA in here, so that's that dark blue line on my chart here. Right above that, and you have this cluster of support, 123.80, 124.53, and 125. So you have decent support down here if earnings fail without it getting too bearish. Now, with that being said, the flip side of that is you could also wait and see if earnings are bearish and establish a new position here if you're not exposed. Would be a decent, pretty healthy area to be offensive if we come back here and test it. But having a stop in this area is more than likely the smart thing to do. Because breaking through this area, especially breaking through this block here, leads it to be pretty bearish. Now, with that being said, if you want to be more conservative, so you're someone who may be older or is just more defensive in general, essentially, to keep it real simple, basically set up your risk at the low of this candle here. It's 129.16. So somewhere in there, stop a little earlier, stop a little later. That'd be your first area where bears could sweep. So if you want to be super defensive, that's where I would look to be defensive there on earnings in general. Now, based on where we're sitting, and again, I alluded to this earlier, but we're basically chopping around this 134.22 area. Now, you do have this area is a pretty strong resistance. In fact, you can see on 521, the high of this candle was 137.40, basically lined up with that 0.236 retracement from all-time highs to the tariff lows, wicked off it and rejected pretty hard. So this area, and I also have an old LOI here from 137.81. This is the key area to break. It's actually not that far right now. It's 2 points higher, right? So it's nothing crazy, but breaking that, not going to be easy. Now, if it breaks this, you're going to watch for 141.36 to be your bullish confirmation. If you're floating around in here, you could get faked out. So be very careful if you're through this 137.81. You go, oh, I need to be a bull now. Be careful. It's not over till the fat lady sings, and you're at a very interesting spot. So I would be a bull as soon as NVIDIA can crack this 141.36. Then I'm looking more bullish at NVIDIA in general. And that really leads you basically to highs here. This 149.77 and then all-time high, 153.13. So you're not too far off on the bull side of things, where if it can get some juice through this level, so you want to look for specifically volume through this level, that bulls could actually have a very good push here. The other thing you want to be conscientious of is if we push up in this zone, you want to watch for a back test. So you might look to back test this area, especially this 137.40, that recent high, which is pretty aligned with the lines I have on my chart here. Watch for a push up higher, back test it before you push even higher. So that area might need to get retested, and probably will get retested as support before going higher. But again, I wouldn't be too aggressively bullish unless we get over that 141.36. Now, if we zoom out a little bit more, look out here on the weekly, and let's erase some of these lines here for a moment. That POC on the weekly is all the way down here at 116. Now, that doesn't mean we're going down there, but it does mean that we do have a little bit of a conflicting story here with the daily and with the weekly. Now, the weekly looks like it's starting to ramp up. Volume's a little meh. It's not bad. It's a little iffy. And your MAs or EMAs are starting to curl up, indicating that trend could start to be reversing to the upside on the weekly. However, on the daily, you had kind of, like I said, we're kind of farting around this range up here for a few days where it's iffy. Now, this isn't really shocking because it's before the earnings result, so people are positioning themselves, obviously. But you do kind of have this like inverse head and shoulder kind of look, but you're starting to get pretty burnt out here on your MACD. Again, doesn't mean much when you have a binary event like earnings that could change everything. But your MACD is starting to get a little burnt out. I actually like where the RSI is sitting as a bull where we could push higher. But your one bearish indicator here is your MACD is getting a little burnt out and your green star is starting to creep up on you. So it's not that it's bearish, but it's things to consider if we do get a bear push here. And then for those of you that look at volume profile in general, you do have a decent volume profile gap here back to that POC. But as I alluded to before, you're going to have to break through a pretty strong key area of support here before getting too bearish. What I would personally look for on this earnings. So full transparency, at least as of this point right now, I have no exposure in NVDA. So flat opinion is I have no exposure. I have no money in this right now at all. I have other things adjacently exposed, but I have no exposure in NVIDIA as it's sitting right now. With that being said, if earnings are perceived as good, and if you haven't watched that video, I made a video earlier. You can watch that on my channel. But if earnings are good, and I give you the reasons of what to look for in the conference call, however, the stock sells off due to potential weakness in growth or potential weakness in certain things being said, specifically things being said, and we tap this area that I alluded to earlier, this little support block over here, this is where I'd look to actually establish a long position with a tight stop, being around this 123.80 area, risking this lower block. So if I can get in at like 126.25, I could actually establish a decent long position with only a $3 mark down here, and knowing that I've got a few blocks of support here. Now, as a bear, you do know that we have these two gaps here, very obviously. If I was more patient, like I said earlier, there is a lot of volume support down here, right around this 115 to 118.24, this key level I've marked out here. So if we do blow through that support area, I wouldn't be as bullish, and I actually would be less bullish buying it at a cheaper price here, because it's going to be indicative of potential continued weakness. And again, we're talking about tomorrow and the day after and the day after that. Things can change, obviously, especially as we get more volume through the tape, we get an idea of where it could go. But if we break through that cluster there and we get down in this range between that 116 area and 118 area, I'm actually not going to be bullish, not necessarily going to be shorting it either, but I'm actually going to be just kind of watching from the sidelines. If we sustain in that area, you build out a base, then that'd be the time to go long with a tighter stop. But getting down here, breaking this area and getting sub 118.24, especially if you get under this 116 area, I'd be very, very careful, because you could retest this GP down here, which is between 109.98 and 112.03. And if that breaks for whatever reason, and again, we're talking earnings, so it could be a big move either way, it wouldn't shock me to get back to basically 100, and watch out for that. Now, that being said, we're going to do a quick and dirty look at the chain real quick while we're live and while I'm recording this for you guys if you're watching the recording. And right now we're sitting at around 135. So if you want to learn a quick lesson on how to do implied volatility really quick, or I should say the implied move on a stock before earnings, look at where you're sitting, go to that strike, and kind of just add this up, and you'll get a really rough idea of what that could be. And there's other more calculated ways to do this, but this is your rough idea. So you got $5, and we'll just look at the bid. $5 at $4.65, we'll call it $10. So the expected move, again for simplicity, is going to be $10 move either which way. And ironically, that $10 move, minus 10 from 135, where's that line us? Right here, right in that cluster of support that I talked about. And again, to the upside, $10 to the upside, 145, that gets us over that bull line to push us to the upside. So the market's expecting a $10 move, so to speak, and again, rough math, on this name into ER. So those are the things you want to look for. So if you're leveraged or if you are exposed to this trade, keep an idea that you're looking for a $10 swing either which way, and obviously plan accordingly. So hopefully that helps you with NVIDIA's ER today. All right, cool. That was like 30 minutes on NVIDIA. Does anyone have any questions? I don't think I've said NVIDIA more in my entire life than I have today. NVIDIA. My throat is dry from talking about NVIDIA. NVIDIA. And like I said, I recorded both of those. As soon as I'm done with the stream, I'll upload them. So if you ever want to go back or mark out the levels or whatever you can, you don't have to fish through the stream. I'll upload both videos. So that way you guys have it. And now we'll wrap up with look at the week ahead on SPY. And then I will set you guys free to make horrible, bad decisions with your trading. I'm joking, of course. None of you are going to do that. You're going to make fantastic decisions. SPY right now, sitting just shy above this volume shelf. And this is the daily chart here. And POC is right at 587.63, so about $3 higher than we currently are. It's interesting. It's very interesting. I find it very hard to have an overtly bullish opinion when we go basically like a 100-point swing in such a short period of time. With that being said, though, this was all news-driven, just like how COVID was news-driven, right? And now we're basically starting to return back to normal. So even though we had this harsh discount and we had this, I want to say like repricing, now that we're sitting up here, it's basically returned to normal. Like we're back at pricing from, you know, a year ago in general. I'm floating around there, right? But we're back at like fair value pre-tariffs. Now the tariff news hasn't been fully, it's not done yet, right? It's not out of the woods with that. But you're seeing the effect on that news being lesser and lesser of the market, and the market tends to be more resilient as the same news gets recycled, right? The market cares less and less. I personally am just very defensive here. I'm not bearish on the market necessarily, but I am defensive. Meaning, I am sitting a good chunk in cash right now because there is a case where the market comes down to around 570-ish. Retest roughly where that 200 MA is. You fill the gap here, you know, all that fun stuff. Coming down and just kind of sitting around here for a little bit. It's just as likely of a case to push to the upside, at least in my opinion. And I say that because, like I said, this is it's a sharp discount. You've repriced back to where you should be. And now it's just kind of like business as usual, where if you go from the tariff low and you go all the way to 5.8, you erase that. Like, let's pretend you just erase that. And you go back to like here where price was 574 pre-tariffs. That was in March. We're basically there where we continued our upside and we came back down. So we're in the same place that we've been ultimately. And also price action doesn't look like this, where the market was looking really toppy back in early 2025, where it just went up, went down, went up, went down. And we just kind of, bulls never had the steam to push higher. You're seeing a healthy push here, a retracement where we cooled off. And now you're pushing again a little bit. There's an argument both ways. I would prefer to see the market actually come down here and cool off and really look at this high of this candle. 576.41. Back test there and kind of sit there for a little bit. That keeps you above your 21 EMA, keeps you above your 200 EMA. You might tap your green SAR and pop that bubble. It's going to let your MACD reset on the daily, so it's going to give your technicals time to cool off. With that being said, though, this weekly looks ready for a continued rip. You fall, you rebounded, you cooled off. So anytime you had a big pop, you came down, you relaxed, and you're ready to go again, so to speak. And that's kind of what we're seeing here on the weekly, and the weekly looks pretty solid. The monthly is kind of like that too, where we could just rip to 700. Like there is a world where that happens, and I want to bring this up because I believe it was on the last stream we spoke about the SAR. Monthly SAR is red right now. This is exciting. Okay, I'll show you guys. When the monthly SAR breaks, you tend to get a big move. Specifically when the red SAR breaks, because obviously the market is always forward-looking, always tends to be bearish, right? When we look at SPY, why does SPY, here, quick side note, why does SPY always go up? SPY is always going to go up, theoretically, because it's 500 of the largest companies in the market, right? So if I have 500 of the best performing companies, and number 500 and 499 are underperforming, then they get pulled, and then they plug in the next two, 501 and 502 that are performing better. So theoretically, the best performing stocks are always going to be in SPY. So SPY theoretically, unless there's a full contrition where all the stocks are pulling back, again, all in theory, will always have the best quality stocks in its ETF and with SPX in general. So SPY in general, the way it's built, is going to have 500 of the best names in its ETF. So in theory, when the names suck and they get pulled out, you're going to be plugging in better names, right? So it is always programmed, so to speak, the way it's structured to always go up, theoretically. What I like about this is every time there's a red SAR break, you get a pretty sharp markup. Last red SAR break. So again, these bubbles on our chart, and this is one indicator, right? We talked about this last time. We focused in on the SAR indicator. This is on your monthly chart. Red SAR bubble broke on 4/28/2023. We priced at that time was around 404. It went all the way to 611 from 404. So $200 gain on that last red SAR break. Look at the one before that. This was COVID, I believe. Yes, so COVID. SAR broke around 304. Went all the way to 458. 150 points. This one was a little bit more conservative. Price was at 264. Went all the way to 315. 70 points. Let's keep going. And you're going to get the point of the exercise here. This red SAR from 2015 broke 178, 265, 100 points. We'll do one more. Red SAR on the monthly broke 104, and I'm just ballparking the number here. 104 went to 180, 70 points. So when the monthly red SAR breaks, there tends to be a tremendous gain, a tremendous rally. Now that I've said that, where are we on today's chart? Where's today's monthly chart? Well, this is the monthly chart that red SAR bubble has populated, and currently that value is 608.79. If and when this red SAR bubble breaks, which it may not break this month, may not break next month, if and when it does, I'm going to be very long the market. I'm going to be very bullish. You hear me always talk, or you may not hear me, but I always say, there's time to hit the gas. There's time to hit the brakes. When this breaks, and again, it may not be right away, but consistently, when this red SAR bubble breaks, the market rallies hard over time. These are monthly candles, so it will take a while, but the market will rally. The other thing you want to keep an eye on, obviously, your volume, and there's other indicators here. Your MACD is actually red here currently, so it's showing that there's a period of a cool down here where you could get that flip to the upside and have a bullish MACD flip while you break the SAR. That would be very good. So for me, I'm not necessarily bullish. That's why I'm saying I'm like risk off right now. And you'll hear me talk sometimes about how there may or may not be opportunities in certain names. It might sound funny because I'm not bullish until the price actually goes up. And you might go, well, Adam, why would you want to do that? Wouldn't you want to buy cheaper so you could make more money? Yes, but I'd rather, and I like using this phrase a lot, and for those of you who know me, you know what I'm about to say, I'd rather show up to the right house party late than the wrong house completely and get shot in the face with a shotgun. Right? So I'd rather wait for confirmation and make sure things are bullish, things are going to work in my favor, then expose myself to said trade versus get in early and kind of gamble on it. Now, there's ways to do that, obviously, and you might have a structured options trade where that makes sense, but I would rather wait for that sign before going very hard than kind of like gambling money and be like, oh, well, it could happen, and if it does, I'll make a lot of money. So I heavily recommend you start thinking with that kind of idea where both bull side and bear side, you think of, I'd rather wait for that confirmation before making the move than trying to beat the move before it happens. Now, there are times, especially when trading options, you can predict the move beforehand. And if you're in our community exclusive trading, you see me do it all the time, where I kind of get in and I predict the move beforehand. It doesn't always work out, but you position yourself accordingly, right? When I'm speaking about this on a monthly chart, I have the, here, let me erase my lines again. I have the benefit because, again, these are monthly candles. So time is really on my side. When I was just going over these, and again, we were only talking about the SAR, going over these gains, we were talking, I think the lowest one was 70 points. And you got to keep in mind, as the SPY gets cheaper, so we went back in time, 70 points is even bigger gain than 100 points from last time because the evaluation is lower, right? So the lowest gain would be 70 points. Again, theoretically going back in time. Percentage gains are what matters, but so even if I miss out on 10, 20 points, I still have 50 points of upside, and that's from the most conservative estimation going all the way back to here when 70 points was like a 70% gain, right? That's the way you should be thinking, at least in my opinion. You do whatever you want. But that's how I like to trade. All right. I think that's going to wrap it for today. Good stream today. Spoke a lot about the market. Like I said, let me get the lines back on here. There's a bull opportunity on this 589.53 potentially. Called that out at open. That's what I'm waiting for. If bulls step in here, that's where I'll look to take a stab. So do with that information what you will. Other than that, I'm not too aggressive on the day. You have a massive catalyst after hours today. On top of that, we've got, that was added, that wasn't there this morning. You got Vance talking about Bitcoin at noon, so you're going to see some sort of reaction with miners, almost guaranteed. And now Trump is also speaking at 2 at the same time that the FOMC minutes are going to be out. So that will be a whole blast. Fun time. Anyway, guys, hope you enjoyed the stream today. Hope you learned something. Someone will say, some people say you need an edge to trade. Well, I like to look at things from a different angle, and that is always what you'll get here on the Atomcash angle. Have a great rest of your day, guys, and remember, precision beats prediction every damn time. Take care, guys. I'll see you Friday at 9:15.
The time has passed, and that's a wrap. You're on with the angle and your plan of attack, while the show is at an end.